let us study about traditional classification of accounts in detail. Now, under traditional classification, any account can be broadly classified under two different categories. The first one being personal accounts. Now students, as the name suggests, personal accounts are accounts which relate to any individual. In any sense, if it is related to an individual, it would actually be a personal account. For example, debtors account, creditors account, they are individuals, so they are classified as personal accounts. They can carry a name, Ram, Shyam. Your bank account. Your bank account is actually run on your name, so it is your personal account. Similarly, the another category of accounts is impersonal. As the name suggests, they are not related to individuals. This category of accounts is further subdivided into two broad categories. They are real accounts and nominal accounts. Real accounts. Real accounts are accounts of assets. They generally relate to assets, cash, land, building, machinery. They are examples of real account. Nominal accounts. Nominal accounts are the accounts of income and expenses. Salary paid is an expense for the business. It is a nominal account. Interest paid is an expense for the business. It is a nominal account. Rent received is an income. It would be classified as a nominal account. So now students, we have two broad categories, personal accounts and impersonal accounts. Impersonal accounts are further classified as real and nominal. There are subcategories to all these accounts also. Let us understand them as well. Personal accounts can be further classified as artificial person account, they can be classified as natural personal account, and representative personal account. Now students, artificial person accounts. Artificial persons are actually firms or entities which are run by individuals. Something like you are dealing with, let's say, Reliance Industries. For you, Reliance Industry would be an artificial person. All the rules would be applied as if it is a personal account. So since it is not a natural being, it would be categorized as an artificial person account. Similarly, natural person's account. Your debtors, your creditors. Let's say you purchase goods from Ram. So Ram is a natural person. His account would be a natural person's account under the category of personal accounts. Coming to representative person accounts. So now what are representative personal accounts? Accounts like outstanding salary. Outstanding salary. Now students, salary per se is a nominal account because salary is an expense. But when we say outstanding salary, we relate to it to a person to whom salary has not yet been paid. As we relate it, it becomes a representative personal account. Coming to real accounts. Real accounts can be classified as tangible and intangible. Tangible are the ones which have physical existence, something like land, building, machinery. They can be touched, felt and seen. Whereas intangible accounts are the accounts which do not have physical existence. Something like your goodwill, it can only be felt. So now such kind of assets are classified as intangible fixed assets. So real accounts are further classified as tangible, the ones which have physical existence, can be touched, felt and seen, whereas intangible accounts which do not have physical existence. Nominal accounts, they are further classified as accounts of incomes and expenses. Expenses, the amounts that we spend to earn incomes. So both these accounts are covered under the category of nominal accounts. Coming to rules under traditional classification. Now students, rules of debit and credit under traditional classification. Now students, personal accounts. For personal accounts, the rules are debit the receiver and credit the giver. That means if the personal account is acting in a manner that it is receiving something, so it should be debited. And if the person is giving something, his account should be credited. Coming to real accounts. Real accounts are accounts which are related to assets. So either assets come in or go out. So rules are based as debit what comes in and credit what goes out. Now students, you must remember these key words here. The rules are based on what is coming in and what is going out. Debit what comes in, credit what goes out. For personal accounts, the keywords are receiver and giver. So debit the receiver, credit the giver. For nominal accounts, what are nominal accounts? Nominal accounts are accounts of income and expenses. So the rules are based on whether an item can be classified as an income or it is an expense. So the rule is debit all expenses and losses. It is the keyword here, and credit all incomes and gains. So now students, for nominal accounts, we must actually look for whether an item is an expense or a loss or it is an income. If it is an expense, it should be debited, and if it is an income, it should be credited. We must all remember these rules by heart at any given moment of time if we actually wish to pass all the entries correctly. So now just to reiterate, personal accounts, debit the receiver, credit the giver. Rules for real account, debit what comes in, credit what goes out. For nominal accounts, it is debit all expenses and losses, credit all incomes and gains.